Hello, everybody. Good morning, warriors. How's everyone doing? Hello, Nick. Hi, Steve. Who else is here on the team? Yeah, Nick is here. Baloo is here. Hi, Matt, FX Honor, Dan, Patrick, everybody. How's everyone doing? So we don't cover this instrument here at ForexAnalytix, but I know a lot of people are believers in this Bitcoin blockchain technology. And I get some great looks on Twitter from some of my followers. So here you go. Buyer beware in Bitcoin. Yeah, 3 drives in Bitcoin up here. So if you own some Bitcoins, maybe you want to go the door on half of your position here. This is a weekly sent to me by Rudy Marin. So I thought I'd show this to you guys to get started. Be careful with your long Bitcoin positions. Yeah. Good eye, FX Honor. All right, let's get back to our stuff here. And we're supposedly, Paulie Franco's going to be with us, the host of Morning Edge. So yesterday, talking about a scalp, I needed another high in US dollar yen. And so far it is not confirming. I was thinking 1240, 1250. Perhaps a toe in the water up here. They cleaned out the stops over yesterday's highs. And so that goes pretty much for most of the yen crosses. Euro yen's diverging. The guppies diverging. Aussie yen really got hit yesterday. If anyone took it, I think
what the hell happened to the Aussie overnight? You know, that was bad.
Yeah, what was it? RBA?
I don't know. I was asking.
Okay. Oh, okay. So, so if I think there's going to be some type of reaction in the yen, and I showed Grega's count, that could take us back down to, you know, around under 111. I would not be short the metals here, especially silver. And you guys know I'm not a perma bull in the metals, so just taking a look at the silver here, I know we're making new lows.
I think, you know, if I had to say I think copper was the reason that Aussie has been so heavy, you know, Dale, because copper had a really bad night too, lost the 200-day moving average.
So it was, and that would be China. Yeah. So, yeah, China, copper, leaning on Aussie. You know, I've had this discussion with some people before, Nick, that I kind of correlate the Aussie with the gold, but people say base metals are a better correlation, so that's a good point. But I don't think I'd be short the silver anymore. In fact, I think Grega has a nice little count here. I'll share, even if you're not a subscriber, Grega's count here. So I come up with my own ideas, and then I go to ForexAnalytix and find someone on the team that agrees with me. So
I have really good potential support, you know, in silver and gold here, like a bit of a do or die level. I think we're at
1250-ish in the gold here for very significant support.
Yes, 1252.
Okay, so at least cover shorts, or it could be a long scalp in the metals setting up here, and a pullback in US dollar yen. So okay, Jess says Aussie, it correlates more with copper. Okay. You know, copper is, I learned in the old days that all bull markets are roofed in copper. So if copper is starting to roll over again here, that saying did not work for years. It's the biggest roof in the history of mankind, but that was speaking to the stock market, that all bull markets are roofed in copper. You know, copper's the metal with a PhD in economics. Dale Pinkert says copper is about construction and gold's about destruction. So copper is a very important metal, even if you don't trade it, to give you kind of a bias and a feeling of what's going on here. So Nick, great to have you here today. If you have some looks, I'd be more than happy to turn over the screen. And
I'm happy to answer questions actually, because like if anybody wants my view, sure they probably don't. But I mean, that sounds really vague.
I've only been here a month, and I could count at least on one hand things that you hit on the button that help my analysis and trading. So,
okay, well, if anybody wants any chart, we'll look at it right now. Any chart.
Okay, all right, I'm going to turn it over to Nicola so that I can
where's the comments? Let me, hold on.
Just open hand, Dale. Who is Nick? Nicola Duke, FX Honor. Just open one hand, Dale. What do you mean by that, Jack?
Nick, I can read you some questions if you want, because I see that you're in as a panelist, so you can see them. Let's
Hi,
see.
Steve. How are you? How are you, buddy? Hi, Steve. How are you, buddy?
Hey, Dale. How was your night, mate?
Good, buddy. So, Nick, you have the screen if you want to take it. All right.
Can you see my screen?
Yes, we got him.
Okay, so does anybody ask for anything? Okay, I'm going to have a quick look at the dollar because I think that that's important and see if anybody wants it. For me, okay, this 99.27 level, 38.2 that we gapped below after the French election, we've held below. When you see a gap like that and then consolidation, that's bearish. So I don't see, you know, unless the FOMC surprise us tonight, I don't see this gap getting filled, and I'm leaning towards lower for the dollar index, and that fits with what I see in the euro dollar. As Gregor says, you know, when you see, I'm going to go to a 4-hour chart. This kind of wedge consolidation you see at the end of trends, but they normally break with the trend. So my levels are at 110, 109.80, 110. Really major ABC projections, measured moves from the lows in euro dollar.
I've been waiting for that. I've been waiting for that.
What I think that we'll see, I think, you know, I think it's pretty nailed on that this Macron guy is going to win. I think the euro dollar will attempt to rally, and I think if it stalls anywhere, you know, it probably might spike through, but I'm definitely looking to sell the news after the French election in the euro dollar.
I thought Stelios does the Macron work here at Forex Analytix.
Yeah, he does.
Oh, that's macro, not Macron. Okay.
Yeah. But for me, you know, I'd like to see the news propel us into that level, and then I'd definitely be a seller, 110ish, 109.80 in euro dollar. Okay. So that's what I'm looking for there. For me, okay, so for me the pound is already there, you know, at that kind of ABC measured move place. But the problem is that the low is really, gosh, these are such message charts, I'm sorry. The problem for me is that the low, the crash low from October 2016, you know, there's some discrepancy over. So everybody agreed the low at 118.60, and if that's the case, then 129, which is holding as resistance, is the measured move level. But a lot of people have it higher. My chart here that I use, I like IDC on TradingView charts because they have more history than the others. Yes. You know, that's got the low at 119.50. That's another 100 pips upside. That would take us to that sort of 130 round number resistance in the pound. So I think that for the pound, it's going to depend what most people are looking at, you know.
Yeah, so it you know, depends on the platform, huh?
Sorry? Well, you know, that crash low, all different brokers had all different lows. And I understand that everybody got together and agreed that the low would be 1860, although I haven't seen it written down.
After they filled a bunch of longs at 1860, then they decided, right? Phil took out liquidated out some longs at the low. So, yeah, that's an interesting look. So, you know, Nick, is that where you talk about the gap on the Dixie and that it hasn't been filled?
And the euro dollar, that's the French election gap. And the dollar slipped in case of the...
And that's bearish. Yeah,
but when you see a gap, like for me, if the gap doesn't fill in 2 or 3 days, I think your gap trade is done. Well, that level might be support or resistance when we come back, but as a trade to fill the gap, it's pretty much done for me.
If it fills a gap, would that be exhaustion? Because, you know, the only thing I'm skeptical of is, you know, a gap, and, you know, if it's a breakdown or breakaway gap, why is it giving people a whole week to decide to get short the dollar?
I know.
That's my skepticism, okay? And at times it, proves to be, Dale, don't be so skeptical. But when I look at this, and if you got short on the breakdown gap, you haven't made any progress. And, Mr. Market usually doesn't make things so convenient. I'm not saying that it's not going to play out this way, but I'm just so jaded that when the market gives people a week to make up their mind on a breakdown or a breakout, I'm wondering why they're making it so easy.
But, hasn't the dollar has got, since Trump got elected, the dollar's got to be the trickiest trade out there, hasn't it?
Yeah.
For me, I found it really, because the market doesn't really move on any fundamental news. It moves on tweets and comments about tax ideas and
right.
Very difficult. So I think, probably with the French election though and the FOMC today, maybe that is why the dollar's gone sideways. I don't think most people, I don't think the market did expect the dollar to make a new low there or gap lower.
Oh yeah, So it's kind of like frozen and we're waiting for the next catalyst.
Yeah, perhaps we're seeing
could be the Fed today. Their statement could be dovish and they take it down.
Once the longs finally give up and get rid of it, then it will probably move lower.
Okay. All right. What are you seeing in anything else on the radar that is compelling to you?
No, the only thing that's really, the very key, I agree with you about the two key levels in gold and silver. The only thing I'm trading is oil. I've been trading oil. Oil is quite interesting juncture on the short side.
Now that
pull out that chart.
I'm asking both for USD CAD and oil, so perhaps you can speak about.
I can't hear Steve very well.
Yeah, he's pretty low.
Oh, sorry.
Oh, look, you got a 3 drive in gold right here, or what you were just showing there. But anyway, all right.
Oh, I'll show you the gold. Hold on. Yeah. No, I'll show you the gold.
Okay. There it is. Yeah. See those 3 pokes down there?
Yeah.
I mean, that's a textbook. Do not be short gold. I think it could come out of the hole here.
No,
those are the things I wait for, Nick. I mean, I trade other stuff, but I'd be better off just waiting for my stuff to appear like gold is this morning and just going with it. But that's right out of the J.R. Hill textbook of a 3 drive to a bottom formation.
So I'm just going to tell you, like for me as a Fibonacci trader, the 236 retracement is like the bull bear line. So
interesting.
When the gold moves, like for every swing, I still keep it on the low, so it's still down here on the December 2016 low, but all the way up. You move it up as it moves up, and the 236 is the bull bear line, and that's right where we're sitting at 12.52.
So I mean, you could buy it with a $5 stop. Yeah, real tight stop. You could try it.
Really, and here we are right on the 200-day moving average as well, and look how that's worked. It's worked really well. If you go back, so it looks like do or die right here for the gold. Yeah, so copper has lost the 200-day, but gold quite often
I've seen them move in opposite directions before, copper and gold.
So here we are. I wouldn't be surprised if this little move below it today is a fakie. So for me, where we close the day relative to the 236 is going to be important. And I think probably the FOMC tonight will decide it. So that's what I'm looking at in gold.
Where are you at on U.S. dollar yen? I know that longer term, you and Greg are constructive on it. Could there be?
I'm very bullish on it. Yeah, but I thought, to be honest, I thought that we would see more setbacks this week with the holiday. So for me, this was like a textbook. It was such a lovely ABC equal measured move into the 50% back of the rally from all the way back from the 2016 low, and the 200-day moving average. It was like all lined up,
right.
And the sentiment really supported it as well. Everybody was really bearish dollar yen. So and the market tends to like the 200-day moving averages. Is quite flexible, and first time back to a big moving average that you haven't seen for a long time. I do expect it to bounce off, but quite often, you know, the market doesn't let it easy. So the first couple of times it'll close the other side and it'll trick everybody, and they'll say, oh look, we've broken below the 200-day, sell, you know, and gets everybody excited the wrong way, and then it'll turn. So
so maybe we could get a pullback to 1070 or 111 to get on board, because I know you're
you know, for this I'm just going to clean up these lines. Okay, so in Fibonacci for me, so we've hit the 38.2 retracement from this high, and 38.2 retracements are really mucky levels. You know, that and the 618, you know, the market very often has spikes through them, has a really good look the other side, and will close back below. Unlike, you know, a 236 or an 886 are very sharp, and very often a 50 is sharp. The 38.2 and the 61.8 are really messy levels, and so the fact that we're trading well the other side, I wouldn't be surprised if we go to 112.40, because I've got a bit of a level there, or these lows here, which is the 12.56, and we could still go all the way up there and close back below today with the FOMC, and you know, still see a setback. What I'd really like to see how we've got a really nice sort of left shoulder that's a bit of congestion zone between one sort of 112.15 and 110.50. I'd really like to see some back and fill here, actually, to let people in all the way back to 110.60 would be great, wouldn't it? So
yes, it would. So you are getting some requests to take a look at your oil views and Euro TRY. Euro TRY. What's that?
Euro?
Yeah.
Oil and USD CAD. A few people have been.
Okay, we'll do those. Okay, so that's Euro Sterling. I don't know what's the matter with me. Okay, so we're going to look at the continuous spot chart rather than the front month futures, because the moving average isn't in the right place. So you can see, you know, previously the 200-day was a very sharp average for oil. You know, it would be literally one touch, kiss off it and move, one touch, kiss off it and move. Same here. But since a year ago, April 2016, what we've seen is, you know, really big moves the other side of it that come back and then reverse the other way. And that's what we saw in March. And this time, you know, it's really kind of do or die today. We found buyers yesterday, and we attempted a bit of a, you know, sharp close. Unless we turn it around, and I think, and have a bullish reversal today, I think that we've actually lost the 200-day moving average this time, which is fine, you know, because I'm short, but I think what we're seeing is an ABCD correction, and the only thing that would stop us going down to a full measured move and a bullish Gartley pattern down in the mid 44s is if we did a move where C was 618 of the AB leg here, and we've pretty much dropped too far below that. That's at 49. That's why I say we really do need to turn around today if we're going to go higher from here. Otherwise, I think we've got another at least $3 downside.
So that should probably take. So would you think that would take Canada up to about 39?
Yeah, no, I'll show you where we're going in the CAD next. So that's my view of oil. You know, it's pretty key here, and
well, it's setting up. It's setting up for a nice buy.
It is setting up, yeah.
Yeah, but you have to be patient, like everything else, and wait for the levels and things to complete. Yeah, wait for things to complete.
Patient.
Even a candle, you know, Nick, sometimes I'll anticipate which way a candle's going to close, but you never know till it closes. So, you know, let the market tell you.
Right, exactly. I'm just cleaning up my chart here. So so here's a monthly dollar CAD chart, and you can see that this first rally was to the 50% retracement. So in harmonic terms, if you go to the 50% retracement and then a really nice 886 retrace, so that says to me we're setting up a harmonic pattern, and reversals at the 38.2 or the 50%, always go all the way to the 1.618 of the corrective swing. So that means that
140.
we're going much higher. Yeah, because you can't make a Gartley if your first leg was only to the 50%. To make a Gartley, your first leg has to go to the 618, which we didn't make.
That's right.
So that means we've stalled at the 127, but because we haven't broken below, I think, yeah, that we are going to go to 153 and make a back pattern eventually in the dollar Canadian.
Wow. That, I would guess that would probably be even, even though the Gartley is going to stop at 44.5, that if we're going to...
And I'm sorry for my messy charts today. These are the charts I work on, and so...
Yeah, if Canada's going back to that level, crude may trade under 40 in that case, just so,
right.
Yeah.
So that's my monthly, that's my bigger bias. Now, to get us there, we've only had one leg lower here. We could easily put in another leg like this and come all the way back down to 150, because this, and make a big channel, and then I'm going to draw a trend. So we could easily
have
ABC. Done this, and have done that, and then the pattern will still be valid. So that's what I was watching, and that's why I've been watching this channel, and because this is why there's always uncertainty. Even if you think where it's going to end up, how we get there is always another story. So then we come down to the weekly, and so this was this decline, and we didn't know if that low, because there was no bounces on that first decline, was there? So I'm just going to make this a bit darker.
So that you could have a great short setting up. When I'm going to key, based upon what I've seen and heard from you today, Nick, when that Gartley manifests in crude, I'm going to be looking for reasons to get short Canada once that happens.
Right. So once again, in the USD CAD, and I'm just tidying this up, our first leg here was only to the 50. Okay, so because we know in a harmonic pattern, if the first leg is only to the 50, the second leg's got to go at least to the 1618, which I'm just going to draw on now. Change the color so I can see it. This is how I work. This is what I do all day. That means that for me, we're going to go through the 618, and we're going to go to at least 139.80, and 2618 would take us to all the way back to the highs, which USD CAD loves to do, loves to spike levels back again.
Yeah.
So 38.38 is the minimum. That's the 618. Now we could go to the 38.618, and then if we reverse there, if we rolled over there and made a leg, then we could make a Gartley, and then we'd be looking at the 786, because we would measure and that would be different, and then we'd have a different leg here. But at the moment, that's how it's looking. So for me, at least we're going to 138.38 next. That's the next fib retrace.
Right.
If we fall there and come all the way back, then I would say that that's more bearish, and we'll only end up around 140, 142. But if we keep going through, then yeah, that's what I'm looking at. That's how I look at it. That's great.
Nice views. I love your work.
So,
Nick, do you have a suggestion for a good resource for harmonic education besides following you on Forex Analytics?
No, I literally, I got MetaTrader because they had these, because there are free EAs, and there are free little apps for MetaTrader which will draw the patterns for you. And I have to say that I never thought they were that good, because they would do the swing from the wrong place or whatever. So, I literally got a list of patterns and the pattern rules from the Harmonic Trader. The harmonictrader.com is the resource for me, because he really
is that Scott Carney?
That's Scott Carney, yeah. He wrote the book, and he's got get his book, which is what I got, or use his website. All the definitions are there, and literally draw them yourself and see how they work. And it's only by drawing them yourself, like you say, oh, because then you learn the little mini rules within them, so you can say, oh, this reversed at the 38.2, so I know what I'm looking for next. I'd like a nice retracement back to the 88. So mark it, see if it goes there. You know, I really kind of learnt myself drawing them that way. So
Everything is
and now
practice,
if somebody
practice,
gave
practice.
a pattern searching software, I probably wouldn't. I'd probably look at it, but if I can't draw it myself, or yeah, I probably wouldn't.
Not only that, Nick, you know, I go pretty far back, you know, and to where I used to update my charts by hand. You know, they were daily charts, commodity perspective. There's something that NLP people talk about, that when you write something or you draw it yourself rather than depending upon software, that it imprints on you in a more profound way, and you remember it. Because how many times do we do great analysis and then the thing evolves and manifests and we forget about it because we didn't write it down, you know? So I think that's an excellent tip. Always try and do it yourself. The drawing.
Well, you know, when I first started trading, all I had was stocks, and we had computers then, but like not for charting or anything like that. Like I used to get the stock prices out of the newspaper or call the broker and plot them on graph paper, and the only indicator that I used was moving averages, because that's the only thing you had to do. So, and I would buy and sell, you know, based on the moving average. So
I remember I was still at the CME, and the first software technical type quotation machine was VidCom. You know, kind of like the CQGs were, and you know, all the floor traders would come upstairs to use it and print out charts, and you know, that was the beginning of the new wave. But yeah, I used to carry my commodity perspective with me everywhere. You know, it had food stains and coffee stains on it, and if I was on the wrong side of the market, my friends would tell me to turn my charts upside down. But you know, I'd carry it around, and you know, stare at my charts all the time, and updated even the weeklies by hand. So we're getting a couple more questions if you have time, Nick.
I do.
Okay, Guppy and Euro Yen, and then Euro Swiss.
Oh, I don't very often look at so Guppy, you know.
I know, because Blake loved the weekly candle that we had last week before he left town, or maybe and he showed it, or it was on his blog post for a look at the week ahead. Very bullish weekly candle in the Guppy. So I'm thinking just like yen, that maybe we'll get some type of pullback from these levels to get on board. Wondering what you're seeing.
Yeah, so look at this rally, this really sharp rally off the October 2016 low. You know, we had a perfect ABC into the 50% retracement of this entire rally. You know, when you see that, like, you should get so excited. Especially, I remember the sentiment when we were here was horrible. Everybody hated it, you know, wanted it. It was so, and it just made
it was
a new
a false
low, you know?
breakdown under that low.
It just broke the January low, new lows on the year, you know, and everyone was talking about how it was another leg lower and whatever. So such a nice setup, and then really impulsive moves since then. So, but we've had no pullback at all. And I think that when the pound turns, this one will turn too. So I've got two levels, 145.55, but I think more likely, you see here, this is that trend line at the top is a mirror of that bottom one. And Jamie Setley, who I'm a huge fan of, he likes mirror trend lines. And so
he's going to be here next Thursday.
Yeah, don't miss him. He's really good. Well, all your guests are good. I thought the guy yesterday was really interesting too. So
yeah, Mystic is a great scalper, and you know, a lot of people may give us their views, but it's like Steve Alge said, he was very generous to share his methodology. Well, most people
Yeah,
don't do that.
I have to say, you know,
If you're here, Mystic, that's for you.
yeah, sharing your strategy is really like gold dust. Everybody should save that because, you know, when you're first trading, you know, learning strategies is the thing. Like,
Yeah,
teach a man to fish, not
yeah.
sell him a few fish. So,
Euro yen looks similar to Guppy. It's probably a little weaker pattern than you have in the Guppy because the pound's been leading away. Oh,
exactly. So I think, you know, for me, the big fib is 123.03 in the euro yen because that's a big fib from the monthly, I think.
So that, you know, that might be a good one to key in if we get the 109.80.
So that's the
you're
38.
looking for in the euro.
So that's the 38.2 from the 2008 low to the 2008 high to the 2012 low. So that's what this gray line is here. That's what the highs were. You know, we had real trouble getting a daily close above it at the end of last year, start of the year. So that's going to be the key resistance, that 38.2 retracement at 123.03. I think if we get a daily close above it again this time, then it will become support and we're going to go all the way to 132, which would be the 50% next.
Yes, Hans.
Kind of go from big level to big level.
Okay, Hans, yes, we recorded Mystic yesterday, so it's there on our YouTube channel.
Yes, everything is uploaded on our YouTube channel. By the way, I don't know if you can hear me well now.
Now we can, yes.
Yeah, sorry about before. I didn't understand that there was some software bug and conflict, so I had to restart. Everything is recorded and uploaded, both the webinar and the interview, on our YouTube channel. I can put the link in the question box, but you can also just go to YouTube and type ForexAnalytix and you'll find us there.
Okay, thank you, Steve.
Nick, by the way, did you have a look at oil while I was restarting? Because a friend was also asking for it.
Yes, we did. Yes, we did.
Oh, okay.
You're going to have to watch the recording, Steve.
Okay.
So, like, do you know, oil is the only thing that oil is the only thing I trade every day, and I really like oil because it's really trendy. So there are some strategies, like if anybody knows Toby Crable's opening range breakout strategy, that works 4 days out of 5 on oil, or even little things like 5-minute J hooks, because it's so trendy. That's why I like oil so much.
So it's one of the more technically driven markets out there.
Really, really is, yeah.
Okay, interesting. So, you
Nick,
know...
that is the strategy that you see the high and the low of the first hour, and then you trade the breakout?
Exactly. Yes.
Okay.
So, exactly that. And that works with tiny stops. So
you guys, this is just a sample of the kind of work that you get from Nick as a subscriber. I know Nick, you know, being over there in the UK, she keeps some different hours, and you know, that's what's great about the software that Steve and Blake and everyone who built the website put into receiving those alerts, and then just being able to refer to it and take a look at what.
Oh yeah, I do put out alerts if I see something interesting. So
yeah. So I mean, I think the software and the alerts are really, you know, unique in the industry. So, you know, it's not like you know, you're getting everything in real time, and that's what's important. You know, a lot of websites, they may have great analysis, but you know, they're not letting you know that the time is now for possible action. So
I don't know if you went over that as well while I was restarting. Nick, people also asked for Aussie USD and Aussie CAD.
Aussie USD? No, let's take a look at Aussie USD. So I'm going to put a monthly up first because okay, ignore the mess of the all this stuff that I've drawn here. This is my monthly chart. Okay, this decline. Okay, so we made the big decline, and the 23.6 fib, which I said for always from the highs is my bull bear line, and that's my trend guide. That was at 78.30. 78.30 was the high in April 2016. So ever since then, so for me, like Aussie's only going to be a short unless we get back above 78.30. And if we get above 78.30, then the next level is the 38.2 retrace, which is at 84.51. So that's my monthly view of Aussie, my big picture. So now I'm coming down to a weekly in the daily, and so we look at.
So we're selling rallies unless we close above 78. Yeah. Okay. That's a nice ascending triangle.
That's like the big view. But then you look for something that will happen to give you confidence that actually you really have seen a bullish reversal, and it's going to take it out. But I'm just really showed you that as an example because it works on a monthly, and I use it on a 5-minute chart when I'm trading oil. So it like works on all the time frames. So
yeah, we're right at some significant support right here.
Yeah, and now this wedge, Gregor will tell you that wedges is what you see in wave 4s at the end of the trend. I was really hopeful that we could make a bottoming pattern and take out that 78.30 and go higher before lower, but doesn't look like it happening. So, it's really choppy within this. And it's been ABCs up and down. So for me, they're all shorter term trades. I think that if we're going to make a big ABC lower, then we're going to find support down here at 70.80, around 70.80. I've knocked a zero off that. And this, in fact, will break this trend line. Everybody get really bearish, the Aussie, and say the world's ending, and then we can buy our Gartley pattern, because that will be. So here, look, we've made a first swing into the 618. Yeah. That means that for the next leg, I'm looking for either a 127 or a 1618 that terminates at the 786 next, and that's 70.40. And I'd like it to line up with the ABC, that's at 70.80. So for me, the key buy zone in Aussie dollar is between 70.40 and 70.80, and that's big picture what I'm looking at. But at the moment, here we are, we're at 74.60, we're 300-400 pips higher. So there's still a really nice short trade, but it is a short trade until we get there. And then a bullish reversal, I will be buying. So. Okay,
write that number down.
Oh, well, I'm sure I'll come into the webinar again. Believe me, when we get there, I'll be shouting.
It's like having tomorrow's newspaper today. Or when you use your monthlies, it's like having next month's newspaper today. So,
right.
Yeah.
Nick, by the way, if you see the 74.50 that you've marked there as a 38.2, it's also a 50% from the last rally higher.
There's huge fib confluence there. So,
exactly.
It could, we could see quite a decent bounce from here. We definitely could. And if we get back above that 23.6, which is my bull bear line, which is at 75.97, then definitely bottomed.
But on the other hand, a close below 74.50 is extremely bearish as an event, because we also have, if you zoom in, we also have a descending triangle that also has its support at 74.50. So major area there, major.
Yeah. I agree.
Exactly. Yeah.
So yeah, that's my view of Aussie. Sorry, what was the other one? Aussie.
If you have any views on Aussie CAD.
Yeah, I haven't looked at that for a very long time, but I'm longer term bullish. Let me see. I think it's on here. Hopefully, I still have it here. Oh, never mind. I'll find it.
Paul Franco's in the house.
Hey, Paul.
Hey, Paulie, how are you, buddy? Can't wait to talk to Paulie. One of the most generous guys on Twitter that I've ever met.
Yeah, straight up.
You know, I
He
mean,
really is.
he's out there to help people even when they don't ask for it. So really good to talk to Paulie today. Yeah, you know, you have no lines drawn on this, Nick. I could tell
I've
you
lost my chart. Yeah, I don't know.
Yeah, I can tell you trade this a lot.
I can't. I had a bit of a trading view dump, and I've had to reconstitute everything from scratch. So, my concern with Aussie CAD, and I know everybody wants to be long of it, but my concern is that this rally from the September 2015 low made a perfect ABC, and unless we get above 1.034 and break that symmetry, we're going to see at least another leg lower from here that will have a relationship to that first leg. So I'm going to take that one off. I'm going to take that swing off. Hold on. Oh, where's it gone? Yeah. Sorry. You shouldn't do anything with technology, you know, while Mercury is retrograde.
That's today, right? Norm Linsky told me.
It's like 4-6 weeks. It's nearly over. But...
Oh, okay. Yeah, Norm Linsky wanted to be on because of that. He was looking for some turning points today. I know you're a fan. I know that even though Steve Volge is very skeptical of those kind of traders, I've seen Norm be right a whole lot.
Oh yeah, exactly.
Yeah.
So here we've got an ABC. If we're going to see another ABC lower before we go higher, then the first downside level I'm looking for is 98.80, which would be 61.8 of that first swing lower, and a full ABC takes us to 95.92. So I don't like the reaction we're seeing at these highs. I don't like this bearish reversal. I really do
looks
think,
like a
because
great
that's an
short.
ABC. This is an ABC. This is a failed. This is a swing failure where everybody's tried to get long above that high and it's failed. That's
and they took out all the buy stops over that high.
Yeah. So
classic on the Mercury retrograde high in Aussie CAD. We'll label it.
So
all right.
Exactly. So I'm afraid I'm not enthused. Whilst we did have a really nice long trade in it, and everything was set up for it. It's not. It hasn't. Unless it gets back above those highs, I'm not feeling it. Sorry.
Okay. And that's more about, well, it's a combination of Aussie.
Yeah. So now this
CAD
618 lines up, with a 50%. So then we'd come a bit through. So 98.60, 98.80. I would draw on here. I'm going to leave it on. So that's my first zone where I'd be looking for some support, or at least to have a go.
Great analysis on the fly. You weren't prepped for this, but I mean, that's the key. It's someone that could just, doesn't have to think about it for hours. All of these things are just natural for you now.
So look, here's a really good example of the 23.6 bull bear line. This is dollar Mexican, okay? And this, dollar Mexican had a really amazing bullish reversal double bottom. So we had a double bottom. I'm just going to zoom really right in so you can see it. And so we had a really nice double bottom here. And then we hit our double bottom, and our double bottom target lined up exactly with the 23.6 fib retracement from this high, and like hitting a brick wall. This is why I marked it, because I put that chart on the site. So whilst we can't get above that, and we've made that pattern, I'm still looking low, and we've got a really major zone down here, between 18 and 1810. I'm looking for in dollar Mexican.
I know Blake was very constructive down there. He kept buying every dip.
Yeah, it was, because it really did suck people in there.
Yeah.
the behavior was so, you know, bullish after this long grinding downtrend. So, but,
Great. Thank you so much, Nick. And
okay,
very
good
good analysis on Aussie CAD. And whoever requested that analysis, thank you, because that's a pretty interesting look there. Nice looking trade there. Let's see, do I have any other questions before I let you go?
Oh no, you better get Paulie on. It's his show. I'm going to go.
Yeah, Paulie's good in 15 minutes for Paulie. Steve, you have anything to add before I take a break and get ready for?
Actually, quite a few things, because it happened that you know, we scratched the surface or talked deeper about them, so I can share some views. And we also had a friend here asking for EuroCAD and another one for Euro TRY. We can have a fast look at those as well.
All right, I want to thank Nick for dropping in today. Always a pleasure.
Nick, thank you very much.
Always a pleasure to have you, Nick, and I learn from you.
Anytime.
I learn from you every time you're here.
Thank you. Bye, everyone. Bye. Thanks for listening.
Bye-bye, Nick.
Okay, Steve, take it away. I'm right here, but maybe from a distance. So I'll take my break while you're talking.
Okay, mate. So let's see what we have. I'll try to address some of the issues here. First of all, USDMXN.
And you didn't short the NASDAQ yet, did you? You're going to let us know when you pull the trigger on that.
Yes, I will.
You know, I got a great tweet, very complimentary tweet about your analysis on NASDAQ in my stream yesterday.
Thank you very much, whoever it was.
Yeah, great presentation of the NASDAQ. Someone loved it.
Thank you very much. For all the positive feedback in general.
This is a great room. Yeah.
We thank you very much. We're trying, you know, we're trying to provide, as you very well know, you know, the best, to the best of our ability, you know, analysis and setups and the market the way we view it. And but of course that cannot
I don't really think this is a room, Steve. I think it's a mansion filled up with compelling ideas instead of furniture.
You always have a poetic way of presenting things. I'll go along with it. Okay. Okay. Tell me if you can see my screen, Dale.
Yes, we got it.
Okay, perfect. So just a comment for EuroMXN. Nick said very correctly that this was a rejection from the 23.6, but this was also a huge trend line that rejected USDMXN. So actually, obviously, somebody cannot be bearish yet because we are holding some kind of an ascending trend line and we're holding above the lows. And I really do not believe that this kind of a move can correct in such a short period of time and just by a 23.6 retracement. Not that it's impossible, but it's not my highest likelihood scenario. So first rejection, there is a chance that we'll make another effort towards 1940, this zone, which will also by then coincide with the ascending trend line resistance, previous support, now acting as a resistance. So this is a fast look at the USDMXN. We also talked about Aussie CAD. I don't know if you believe much in triple tops. Statistically speaking, they are extremely rare, so I have to stress that out. But today's tweezer top candle, and given the length, the magnitude, and you know, the form of the candle, at least as far as it goes by this time of the day, this is likely a reversal candle. And given the fact that we topped already twice here, you should be very, very careful, as Nick stressed out, unless we break above this zone, especially after today's candle, you should be very, very, very careful with Aussie CAD. The reward to risk is obviously not being long after today's candle. There's no question about it.
Amen.
Yeah, so that's with that as well. Now, somebody else asked about EuroCAD. Okay, this is what I have for EuroCAD. Major zone. We are currently at a major zone here, and given the fact that, you know, we are extremely overbought at the moment, and that we've tested this zone multiple times in the past, I would be very careful if long. I mean, if you were long, this was a great trade. I mean, this was an impulsive move higher, A, B, C move lower, impulsive move higher. Being long here or trying to establish a fresh long position here, obviously not the kind of thing you should be looking for. Now somebody asked about something that's quite rare. Euro TRY, I don't have much analysis on it. I have some of it because, you know, I'm paying attention to it. So we have like a megaphone formation here for the Euro TRY that goes all the way back, as you see here.
Yeah, nice megaphone, yeah.
Yes, to 2010.
Yeah.
Yes, we had a little overthrow here and something like a double top, more or less. Here, that was a great signal to be short. You know, the overthrow of the trend line, the extremely overbought conditions.
It's kind of like the stock indexes are in these kind of megaphones too, yes. Steve, don't you think?
Some of them. Other ones seem to be channeling.
Okay.
We also had very clean RSI divergence up here. I mean, we had an extreme reading at the first peak, but on the second peak we were almost back at 70. Yeah. And we now seem to be breaking below, I wouldn't call it a beautiful triangle, but definitely. So look at this uptrend. It's huge. Do you believe that this move can correct by just this little shallow formation? Personally, I don't find it
looks
much
halfway
likely.
through. Halfway through.
Yeah, exactly.
Go into your blue line. Go into your blue line, buddy.
Yeah. So perhaps 200 EMA or whatever. Anyhow, gun to my head, short, no questions asked. I mean, it's actually quite an easy decision. I mean, to be short here, if you had to take a position.
You know, I think Erdogan arrests people for shorting in this market.
Say again, Dale. What did you say?
The president of Turkey, Erdogan.
Yes.
He arrests people for shorting lira.
More or less, yes.
Is that true, Stelios?
Actually, he's arresting people.
Shoots you.
He's arresting people for all kinds of reasons.
Yeah.
And keep in mind that the Turkish central bank is anything but independent. I mean, I remember, when was it, Stelio? Was it a year back, the previous crisis with the Turkish lira, that actually the central bank wanted to hike rates to cool off the selling off of the currency, but he thought that's a bad idea because it would send a political signal, and he actually went in a meeting with them when they were about to decide what they're going to do. Yeah. So as you understand, that's not an independent central bank.
Well, you know what? That's a foreshadowing of President Donald Trump going into the Fed to sit down with Janet Yellen if she keeps tightening.
Yes, but you know, U.S. has other safeties in place. I mean, I bet that President Trump would want to do that, but as you very well know, he wouldn't. I mean, you know, it would constitute.
I don't know. He might. He'd be honored to meet Kim Jong-un in North Korea. Honored. Honored to meet him. What enough?
Steve, before you go, I don't know how much more you have to show. Jack is asking about silver. If you have any thoughts on that, and maybe your opportunity to smash down what I said yesterday.
No, yeah, I think that we'll get. But one other thing, Steve, before you go, and Stelios, I'm sorry, but Steve showed the platinum chart, and my good friend Jess, alias Midas, had a supply zone in palladium at 830. And that there's more supply up at 875. So he shorted at 830. He's going to sell more at 875. And I know you brought up palladium there about a week ago.
Yes. And look at it. Beautiful.
That was it. That was it. Look
another
at that.
rejection. What is it? This first, second, third, fourth
You're not going to be able to sell it at 875 in my extremely accurate and humble opinion, Jess. But nice short at 830.
Yes, but we still don't have a confirmation. And when this thing actually breaks, it's going to move, and it's going to move a lot. You can see the great thing about palladium is that when it does technical moves, I remember, for example, we went long there, here. That was a magnificent trade here. I mean, we went long with the fund I was in. I was monitoring at this triangle and being patient. And when we had the breakout above here, above this level, 760, I remember, or 765, I don't remember exactly which of the two it was, because we wanted the breakout of the triangle and also of the previous top up here. We went long, and this was an amazing. We took profits earlier. We took profits, I think, when we saw this candle here, actually. But that was an amazing run in, you know, in a very little time. Look at this as well.
All right, well, I'm sorry I interrupted Stelios, but he wanted you to go over.
No problem.
And we have Paulie, in 5 minutes.
Let's go to silver, and then obviously Paulie has a lot of things
so
to
I
share.
could take a break before Paulie. So
okay. This is having to do with silver now. This is the 7th consecutive down day, as long as we're concerned for the time being, because it's still early in the day and we have a Fed meeting later on. This is also the 12th out of the last 13 days that we're trading lower. Okay, we've broken below this. We're still above the channel, but there is no significant support until we get to this 1580 zone, or somebody can say the 78.6 here at 1620. 1620 has acted in the past as well, but not recently as support or resistance. This thing is bearish for the time being.
Yeah, I think we bounced to 17 first with the yen pulling back from 1250.
But I have to tell you that I consider this move to be extremely stretched, you know, any way you look at it. Yeah. And I will be looking, although I'm not a scalper, but because I believe in general in the metal, I will be looking to buy any kind of reversal, which might easily come today, easily, because you know very well that by moving the dollar, the Fed will also affect precious metals as well, because a lot of people believe, and it actually, statistically speaking, if you look at it, it does work like that, that the metals are being shifted mostly by real yields, which is actually, you know, the nominal yields minus inflation. So, for example, any move of the Fed today that will also result in, you know, will firstly affect the bonds, will also affect perhaps the real yield. So you can easily see something like yesterday's candle was not a bearish candle with this huge wick. So let's say you get a dollar plunge today after the Fed, which, by the way, if you ask me, the risks are tilted downwards for the dollar for today's meeting. I mean, you never know with the Fed, but if I had a gun to my head and had to decide if the reaction is going to be dollar bearish or dollar bullish, I would go for dollar bearish. So if that happens and you get a second candle that has a large lower wick and perhaps closes higher, the combination of the two candles is going to be bullish. Of course, we just said if and if. That's why I want to see how this day will close. But if we close again above this 61.8 and the horizontal support zone because of a reversal we got from the Fed, the combination of the two candles, the holding of this zone, and the shift lower for the dollar, because one of the assumptions is that we're going to see a move lower for the dollar, will get me very interested to be long.
You're a great technician, Steve. I love your charts. All right, I'm going to take 99 is critical to Ronan. I'm going to take a quick break, and then I'm going to bring Paulie on. Paulie,
one last thing before the break, 10 seconds.
Okay.
I wanted to say that, but Nick said it, and you know, it shows that sometimes, you know, people think alike, you know, when something is more or less common knowledge, and common knowledge many times shows, you know, that something is too popular. But in this case, I think that it's the correct view. The fact that we had the gaps of Euro USD and the DXY not being filled after so many days from...
That's bearish to you.
Yes. I mean, from experience speaking, that doesn't mean that every time is going to prove to be bearish or bullish if the gap was... Yeah, but it's really not looking good. We should have filled those gaps by now. We might have runaway gaps, especially after today's FOMC. So people should really be careful, because I remind you that DXY is holding by a thread. Technically speaking, it has already broken one major level, which was this ascending trend line, and it's just holding by this support. So a breach below it is, we have thin air below us afterwards. So be very careful today. Thank you, Dale.
Be careful every day. All right, thank you,
have a
Steve.
wonderful interview with Paulie. I'm sure he's going to be
Yeah,
great.
Paulie, I'm just going to take a quick break here. And then we'll get going. Oh, that's my webcam. Hi, there's that handsome guy. Let's see. Okay. So here's Greg's look on the silver. I'll leave that up while I take a quick break, and then I'm going to go right to Paulie Franco. So this is why I think the end's going to come off, and you're going to get this bounce in silver, and then the end's going to go again, and silver make a new low. Be back in 5. Thank you, everyone, for your questions. Great questions today. Hang in there. Paul Franco next. Okay, here we go, my friends. I'm going to give Paulie the controls here. There you go, Paulie. I'm sure you know how to use this room. Looking forward to hearing your voice and seeing what you have on your screen, partner. There he is.
Can you hear me, Dale?
Yeah, Paulie, how are you, buddy?
I'm doing pretty good. How you doing?
Good, God. It's been a year or so since I've talked to you.
Yeah,
And,
about that.
Yeah, and I was telling people, what a generous guy you are, and we've had some comments. One of them from Dan Norberg. You're one of the best scalpers around. Everyone say hi to Paulie. So your reputation precedes you. Great to have you with us. So I can't help but ask this question.
Mm-hmm.
Okay, how has it been for you? Because you're the main host on Morning Edge right now, right?
Yeah. Uh-huh.
How has it been for you since Moses Morrow began his exodus to the promised land of ForexAnalytix? Because I know, I'm working with him now. He's an awesome presence. He's, got this hypnotic voice. He's a top drawer, Top Gun trader. How has that adjustment been for you, partner?
It's been interesting. It's been different because I came from a 1 hour show, and I had to do things a little bit differently. Also had to go in and expand the way that I looked at the markets. Because with that 1 hour show, most of my stuff was focused on super ultra short term, and I had to kind of expand that, and also had to expand some of the markets I was looking at. Like I never used to look at dollar peso. I didn't look at Kiwi. I mean, I traded Kiwi before, but so some of these other markets I was looking at and broaden my the analysis on those. So it's been different, but it's been good. It's been a learning curve, but it's been enjoyable. Like I said,
It's been good for you. Because so sometimes what we have to do is new circumstances make us stretch what's our default setting and what we normally do, and it's probably made you a better scalper because you have to look through a telescope once in a while. That gave you better areas, or even gave you more confidence in your short-term zones.
Yeah, I mean, mostly the gentleman was asking, he was correct. I mean, mainly I scalp or short-term trade, but I do try and look at the broader picture, and I actually take in like what one of the things that we cover in the first half hour is we start out the show because it's 2 hours long. cover the technicals from overnight in these pairs that you're seeing here. I think you're on my screen where you're seeing the
Yeah, we have it up here.
And
Yeah.
this is my long-term setting. I don't use 4-hour charts. I feel I get better signals using the 2-hour charts. And then I drop on down to 30 minutes with some exponential moving averages on that, and then I drop down to 5 minutes. And but what we do is we generally will cover the news overnight, or as we come into the day, to see how that sets the theme, or if any economic reports and how that sets the theme, how the market will look out not only for that day, but maybe for the next few days. So I do go in and look at not necessarily fundamental news, but I look at the economic reports and what the perception was going into those reports and how that sets us up where the market's going to go. And then I use the technicals to try and move in and out of the market.
Okay, was that a shift for you? Because I know, Blake talks about if you just trade charts, you're missing half the picture. And, he has a lot of his biases are based on fundamentals. And, I have a saying that, people who buy headlines today sell newspapers tomorrow.
Yeah.
But has that integrating fundamental analysis been an edge for you? Or you always did it?
Well, I mean, I tell people I like to pair a story with the technicals. So I don't go just on the headline, but I go by how the market's going, let's say over the course of, 2 weeks, 3 weeks, and how the market adjusts to that headline. I'll give you an example. Let's say that the euro was wildly bullish, or the euro's been technically bullish, and the news is kind of bullish. And then we get this news that should be construed as quite bullish, and then you see the market go higher to gun a few stops, and then just kind of slows down and hangs around. I'm thinking, well, God, if this is the best you can do on a positive structured market and very good news, then I start looking for short setups, because then I look out and I say, what's the next news that's be coming out? And I'm talking about economic reports, FOMC, ECB, and I'm thinking, you know what? I don't see the impetus for us to go much higher, and then I go and look for those setups. Like a couple of weeks ago, I was telling people, 2.5 weeks ago, I was telling everybody I thought we were going to get a big run up in the dollar yen, and we were trading it. Actually, at the time when I said on the other webinar, we were trading at 109.08, and we slipped down to about 109.02. And I said, hey, look, we got some support at 892 and some more at 882. And I was talking about how the dollar yen and I'll show you exactly where we were at the time. And I'll show you, this is the way that I trade. And what I'm looking for today is 1279. And that confluences with 1269 being the 61% of this entire move of 813 to 1551. And so what I like to go by is, I'm not that much of a trend line person. I'm not that much of a pattern person. What I go by is the levels. And I try and increase the probabilities by using a Fibonacci. And what I do is I go by price structure. Quite often, I got a lot of people that I talk to looking at the ZBs now, because when we were talking about the dollar yen on the way down, I have my own little saying. I go, it's all about the ZBs. It's all about the ZBs. And so we talk about how you put a dollar yen chart and a ZB chart, 30-year bonds, and how the market would, move back and forth based on that. We even have, when market's really trading pretty hot, you can actually day trade it, scalp it, using that same idea. But what I was talking to people back then was when we were down here at 109.08, and I was telling them, hey, I'm noticing something. And I had noticed it over about the last week and a half prior to that when we started to move higher. I said, what I'm noticing is the bonds are starting to move lower, which has an inverse relationship with the dollar yen, but the dollar yen doesn't care. It's like, I don't care. I'm not going to get fooled. I'm not, and it stayed weak. And so I was telling the people in the room, I said, hey, look, I think we're going to start to see this change. I think we're starting to see the first signs of it. And I think that we're going to take off in the dollar yen. I have a stretch target at that time when we, I heard Nick talking, and everybody hated the dollar yen at that time. I have a stretch target of 1075. This is where I was coming with this 1075. I like to go with the most touches. So we made that run up here close to 1050. We sold off pretty good, and we came up here. And finally, the dollar yen started reacting to the moves in the bond market. So I do use correlations, but not correlations as a a definitive type thing, but I use them to see if the market's matching up. The dollar yen and the 30-year bonds match up very, very, very
So
well.
you actually saw the correlation out of whack, and the yen should have been making new lows, but it wasn't, and that was your market tell.
Well, you're right in the most part is that I saw that the dollar yen at the time, that when the bonds would start to move higher, the dollar yen wasn't. Yeah, at the time that the bonds would move lower, the dollar yen wasn't moving higher, and I said, hey, something's wrong here. Now, 2.5 weeks ago or 2 weeks ago, I told people I thought we were going to rotate lower here in the bonds. I go, this market is and I don't use I forgot what the name of that is, where you compare technicals, patterns in price action in one market, and you say, oh, that means that the corn market is going to do this. No, but I said that the price structure was very similar to the way the gold market had done. And went lower. So I said, hey, look, I think we're going to get a top here in the bonds. And I told him, I go, I don't think it's a top, I go, but I think it's a correction. And I thought my ultimate target was 5103, but we had here the 5125, 38%, and the 5121, which we did get to 5121. And so I was telling the people, I go, hey, look, finally the dollar yen started reacting to that. And I think what happened is today is more about positioning, what has been. So I told people when we got up here, we were live when I told people, here's my level, 1066. And we had 1080. I think 1080 was like 1180 was like the 50%, I believe it was at the time. I was trying to hopefully give a few more nickels out on this thing to squeeze it even harder. But we saw the market go and break. And I was telling people that, and I was explaining to them today in regards to the FOMC, that I think a lot of people got short here in this area. And this is why I told you about is I like to use price structure, and I like to look at the bonds, let's say with the dollar yen. And they got short and thinking, okay, this is it for the dollar yen, because we've been, just like Nick was saying earlier, everybody hated the dollar yen. So if you rally up, 300 pips or 350 pips off the lows, surely you're going to see a correction. And surely that's probably going to take us down here to about 1025. So people are licking their chops, getting short. And so I kept telling people, I go, I think there's one more high here in the dollar yen. I go, I just don't think it's going to stop. So we rallied up here. It just comes back down. Like, okay, well.
So based upon what you said before, you have some numbers up at around 12.
Yeah. Here's my number here. Yeah, and I was just
you think we could pull back to your pivot of 110.70 or so? Your initial target?
I'll show you how I play that into, and I think that could be a possibility, and I'll show you how that plays in. And you can see the significance of 1279. I'll show you right here, which I go by the levels. You can see here, and I tell people, I try and show them, give me an example right here. Let's see. So you can see that the market, after it rallies up here, get past this 1279, where do they find support? Here at 1279. Then, and people listen to me know what I'm referring to. I go, then you see a real good battle zone here, 1279. Bulls and bears really going at it left and right. We falter, we fall back, and we rally back, and where we run into resistance at? 1279. What I always tell people is the market never forgets the levels. And people know I'm all about the levels. And when I first started trading, I was drawing all these trend lines, left, right, this way, sideways, upside down. I don't go with the trend lines that much. Now, I did see some of the stuff that Steve had done, see some stuff Nick did, and they're doing it on a longer term basis. Yeah, I will pay attention. And if it's something that's significant, just like I saw here, I'll draw it. But you can pretty much see I just don't have like trend lines. Most of mine are horizontal. Because I say the market never forgets the trend lines. It never forgets them. So you can see here when the market broke past 1279 on this run up, it was blue skies ahead. Okay? Right. And on the sell down, where did this market find support at? Well, they found a pretty good battle zone once again at 1279. I like that. Battle zone. So I think that 1279 is where the market can go to. I've been talking about it for 3 days almost. I've been just saying that. I thought we'd give up 1211 yesterday. I said, hey, look, I got this area here. It's a 61%. I think we're going to go in and go there. Now I'll show you in reference to what I was talking about earlier is people got short. And I think right now what's happening is more about positioning than anything else.
So we're still squeezing shorts now.
Yeah, exactly. But what happened here is I don't think as much as squeezing shorts as the market is going, and I'll explain what I'm talking about. So these people got short, and I kept saying, I think there's one more high, and it came back here. Well, I think there's one more high. Now it came back down. And I told them, I go, my stretch at this point is 1211. I go, but I go, and when we were talking, we were coming into Golden Week because Japan's closed for 3 days. I think these people got taken out of their shorts right here. okay?
Yeah.
So at this point, anybody that got taken out of the shorts and said we're going to go lower, like I told people, given the battle zone example analogy, if you're defending this line and then the forces overrun you, you retreat back. You're not going to retreat back 200 yards and then try and defend it again. You're going to say, no, I need to come back much further and find out where I'm going to make another stand again. So I think today with the FOMC coming up, Golden Week, the market has just been free to go higher and no one's fighting it. Okay, I don't think shorts are necessarily getting run over. No one's fighting it. And what they say is, well, because it's, you know, sometimes people will say, you got too many lines on your charts. I go, look, because some people say, well, if you take out one line, obviously eventually you get right. You don't understand. The market trades on levels. It moves from level to level. Once we break out of one level, they're looking at where's the next key level, just like we talked about 1166. So what I'm looking at is I don't try and say, you know, Dale, we're going to 1189. From there, we're going to stop and we're going to turn around. Look, I'm just looking at the levels. And when I look at, let's say, where the 30-year bond is, or I look at what the dollar index is, or wherever, do I see the markets matching up where potentially from a probability standpoint we can run out of gas or whatever. So we've gotten up here to this 1211, but I told you I like to use a 2-hour chart. And I was pointing out to people, I go, look at this. I go, not only did we get to 211, we closed solidly on the 2-hour bar above 1211. That told me we were going much higher because, like I said, to me it's all about the closes on these bars.
Nice candle. Yeah.
Yeah, look at that. It's went over solid, and 1211 was a very good level if you take a look at this. So look at that. It closed above the prior closes on one bar straight up. So I said, this market's going higher. Where's it going to go to? So then that's where I did the work, and I said, hey, look, it looks like 1279, 1269 being the 61%. And so as we moved higher, I think, like I said, no one's going to stand in the way of this market. We have FOMC. Now, I do combine some fundamentals. When I look at the FOMC, one of the things that I was covering in, I was mentioning to the people today, and I'm in agreement with Steve Volge, I think that the dollar, it's going to be negatively, construed, or what they're going to go on and say is going to go
It'll be dovish, or not hawkish anyway, not hawkish.
Exactly. So one of the things that came out, and I was comparing some news on just general news, and we know that the data's been coming in soft, and it says weak U.S. April auto sales data released on Tuesday added to the recent worries about the outlook for the U.S. economy, which grew at its slowest rate in 3 years in the first quarter of the year. So, and I do trade on technicals. I don't trade on fundamentals. But what I was telling people is, don't forget, this is okay. Earlier this year, we had people saying the Fed was going to raise 12 times this year. I mean, that's an exaggeration, but not much of an exaggeration. We had 4 times, some people saying 6 times. I thought it was the stupidest thing I ever heard of. Look, for the last few years, everybody was throwing tomatoes at the Fed. They're never going to raise. They're never going to raise. They'll never raise. They're never going to raise. So the Fed, right or wrong, however y'all want to perceive it, they've done a great job in the sense that look how the U.S. economy has come about. So back in the old days, the Fed used to go and raise 2 times, and then they would just pause, because the idea was it takes 6 to 9 months for a raise to get into the economy.
Yeah, do you remember that? Do you remember that expression, Paulie? 3 steps and a stumble.
Exactly. There you go. So
yeah, and we've had 3, right? We've had 3.
So, well, we had the one. Well, yeah, but we had recently
a year ago,
December, and then March, and people thinking they're going to raise again in June. They're not raising again in June. That's not the modus operandi of this Fed. So what we've seen here, though, is if you look at the dollar yen, look at that. It's even on its highs right now, and it's not backing down. They're not. Look, what's happening is anybody that's thinking about getting out, they're just looking at where's the next target. That's it. They're letting it run. Where's the next target? My thinking is, and I'm just piecing it together with the bonds. Now, the bonds did go. They've actually started to rotate a little bit higher. They came up to the 38% and got knocked back. If the message is a bit dovish, or not dovish, but the idea is that they're not going to go in and raise. And one of the things that they were notating is at this last meeting, it said in March the FOMC made some small tweaks to its inflation outlook. With headline PCE inflation having risen close to 2%, the FOMC indicated it sought a sustained return to this level and was carefully monitoring inflation for symmetric 2% goal. Well, what happened was since then, the PCE inflator came in and it slowed to 1.6%. So the Fed was saying, even if we get to 2%, we don't care. We want to see sustained inflation or a sustained area before we do. Well, now we're going in reverse. So there's no rush for the Fed to do anything. And on top of that, we actually receded to 1.6%. So when I look at those things, those I don't trade based on them, but they allow me to come in at certain levels where I feel I'm looking for the market to fail or hold. And if I see that, then I'm thinking, okay, well, I got something, you know, it's basically like going out and I get ready to go out for the day and the weatherman says it might rain. And I go out there and I kind of smell some you know, moisture in there and I go, okay, I'll take an umbrella. There's no guarantees, but I'm putting the probabilities in my side. So when I look at the bonds have already held up really well. What kicked off, when you're thinking about why did these people get stopped out? Why did it make this leg up? And you wonder, well, how did it make this leg up here? I guess people were just whatever. No, what happened was the bond market, which I thought was going to come down to 51.25 to 38%, it came down to 51.30 and it popped back up. It came back down again to 51.28. Still didn't come up because I had 51.21 as support, confidence in 51.25. Where the market got kicked in the rear end or kicked in the front end, if you want to call that, was when Treasury Steve Mnuchin came in on Bloomberg and said issuance of the ultra bonds would be a great idea. Okay, that sent the bond rates rallying, bonds tumbling lower, and that knocked these guys out.
The third time it went to your number.
Yeah, well, yeah, it did, but the key thing was that not only did it go to 12.11, it closed actually above 12.11. So you see the last significant. Look at this last significant high right here. That was right there at 12.11. It stopped the dead in its tracks and it fell down to here and then rotated lower, new lows. This time we closed above 12.11, and that's why I was telling the guys to go. It's going to go higher. It's just going to go higher now. And even when the bonds rally, the dollar yen didn't even come off that much. And that's what I'm saying. You're starting to see this difference. Now, as far as the dollar yen, I think this message, the text is going to be dollar negative, and then the NFP isn't going to expect it to be that strong anyway. So I think we can now start to see this market pare back. How much we're going to have to pare back, we'll go in and see. But I think this is about, as my dad used to say, I think that's all she wrote at 12.79, because you can see the significance. Doesn't mean you can't get above it, but what you're looking for is this market to get there and then to basically run out of gas at that point. And you can use that as an area to exit out of your longs. Some people that might be super, ready to go for it. You can look for shorts here at this point here at this 12.79. You may want to let the market finish out the day. We know that you don't expect a lot of action in Asia because Japan's on their 3-day holiday. So now let me get here to the euro. And I think in some ways it's similar in some ways, but the same thing, like a lot of people got pounced on this one. This came to a 61% here, and the market started to rotate lower, and we rallied back up. And at this point, it looked like we were going to 807. I thought we'd go to 807. And then Friday came along, and I was talking to some fellows.
Draghi, the day after Draghi said inflation is not a problem in the Eurozone, they got a hot number.
Yeah, exactly. And I was telling I'm glad you brought that up, because I was telling the guys in the room, I said, there were people that were coming in short right in here because we got below 9. And I said, let's wait till the number comes out. Wait till the number comes out. The number came in strong, and I took a scalp short as it rallied up. I was able to get out with a scalp, and then we rallied up to like 933, I think it was. And actually 935 at that, or 37. I took another short. We dropped down, but we got even higher. I'm like, man, this thing looks like it's going to go on and finish up strong. But I think we stopped out a lot of people in here. Now you see the market's trading in a very tight range. I think the euro can go higher, but I'm not so sure that it's going to be sustained. And when we look at this over here, you can see the significance. Just like my touches always tell you, look at the rally up, and it runs out of gas at 991. And pulls back. Once it gets above 991, it's blue skies ahead, okay? So when they come back on the way back down, where do they stop at? 991. Again, we rally up on the U.S. presidential election, and then once we go through 991, the wheels fall off the caboose. So you can see the significance of the 991.
Great pivot point, yeah.
Yes.
I'll try a short up there.
Yeah, exactly. Here's the reason why it's not, and here's the tricky thing, but my thoughts are, and I was telling people, once these people got knocked out of the box here, I said, people are going to say, I'm not coming back. I'm not going to play anymore. I have no interest. Call me when we get above 961, or call me if we get above late 61. And you've seen this, the market's traded in a very tight range. Here's the deal is that 2 months ago, and I was telling people I thought the euro could go higher, and I said, look, I think the next move is for the dollar to go lower, was because 2 months ago we got the best European PMIs in 5 years. And that was followed up last month by the best European PMIs in 6 years. So then you started seeing all these banks, you know, adjusting their forecasts, and they're looking for 113, 114 euro. And people probably thinking, I was telling the people, you're probably thinking, what the heck are they talking about, 113, 114? Because you're seeing these interest rate differentials now.
Right, narrowing.
Yeah, and so the U.S. has had a strong economy, but now it's the euro that's now taking the baton. And so when you look at interest rate differentials, one of the things that hurt people in the last ECB meeting, people got fooled, was it wasn't what Draghi said, it was the text that came out. And the text that came out said, we'll still use all our tools if necessary. You're like, use all your tools? Why would you use all your tools? The Eurozone economy is really taking off. So the people that got long got kind of like knocked out of the box on that. And so I was telling the people, I go, any rallies they're going to sell into. And sure enough, we looked at the 925 and 930, and we ended up selling off from that. And Draghi he was actually conducive. He was saying, yeah, we're still worried, but yeah, there's some growth. The guys and gals didn't care anymore because they had already gotten kind of stung by the text that came out. So like I said, obviously we've rallied up, but my concern is if we get above 961, and we're able to sustain that, that's where you're going and get new buy-in. But we still have the NFP. I don't think the NFP is going to come in strong or anything like that, but people will take some money off the table on a run up just ahead of that. So we may not see it necessarily today, but I think we've seen it before where a market holds steady the euro, and then by Thursday evening you start seeing the market pull back, and as we roll into Friday morning it's already given 40 or 50 pips. So if you're looking at an area, I think it'd be the 991. I think that we're eventually going to go higher in the euro, and I think it's going to be as the U.S. continues to slow, people are going to have to take June off the back burner, and you're going to see those, what they call the interest rate differentials. And I'll give you an example. And
Continue to narrow. Yeah.
Yeah. Okay. Well,
so you're probably tracking the bunds as well then, if you're looking at that.
I don't follow the bunds that closely, but I'll tell you what, we all learned the most from our mistakes. I remember, this was years ago, I remember the euro trade at 124 and 124, 125, maybe 126. And I had a conversation with Mark Dow at that time, and I was saying, this economy is so sorry. The unemployment is terrible. It's going to go down. I'm telling you, I don't care what you say. It's going down. It's going to go down 112. And he goes, it doesn't make any difference. He goes, it's the flows. I go, what do you mean the flows? He goes, well, and he goes, the interest rate differentials. He goes, it's the flows. You're not going to be able to stop. I go, I don't care. This economy it's crappy. I'm not saying you don't know what you're talking about, but this employment is going to get worse. And you know what? The euro kept going all the way up.
Yeah, Mark Dow is a sharp cookie, man.
Yeah, it went
to Donald Trump stuff.
So you can't fight the flows. I learned that some time ago, and I was telling people when gold was rallying higher, and I go, you can't fight the flows. Only the flows in different ways. So it can be investment flows, or in this case, the flows moving into those. Because don't forget, the eurozone bonds were so bad, and now you can now start to buy them, not buy them, but I'm saying you're going to start to see that differential as they start to, where the boon, like you said, the boon had gone so low, and now it's basically reversed. You're going to see this widen out where it makes sense. I mean, where the euro itself is going to take advantage of those flows. So in that sense, you can't help but the euro to continue to gain. And as you see the economy get stronger, I tell people it's not so much the euro, is basically you have to reprice the valuation of the euro. So on a very short-term basis, yeah, I think that we can go up here towards this 991 today. I don't think we go all the way to 991. We'll probably see it then rotate lower, but then I don't think you'll start to see the real move starting after we finish this week. Next week, then that's where we'll probably see the euro eventually go higher. At that point, Volge was saying, I heard him, and he's right. The dollar index is just barely hanging on here. If you look here, It can go much lower, but my initial area is 98.53. But yeah, we can tromp on down here to 98.17 without any problem.
Yeah, look,
97.50.
Nick's looking for about, she has a harmonic around 97.70.
And
Paulie, you also got some credit from Dan Norberg's a big fan of yours. He talked about you being bullish USD CAD, and I at 33, and I have to say, Paulie, that maybe my memory isn't serving me well, but I think it is. And the difference in your analysis between now and a couple of years ago, and the conviction that you speak with now, is really amazing. Your confidence has grown. This was a great interview. Great, you gave us some very good looks and levels to pay attention to, and rationales behind it. And I'm proud of you, how you've really advanced as an analyst and trader, Paulie. It was great to witness this today. And go ahead, buddy.
No, I was gonna say, well, thank you very much. I mean, I've found that, and I guess that's for those people that just say, hey, I only want to look at the technicals, that's it. And you can't fight the technicals. I mean, you could, like I say, when I look at, and I don't look at necessarily fundamentals, I'm just looking at what I tell people, that economic news that may set the theme for the day, or how the market, how it's going to react. But ultimately, it's the technicals, and the technicals help you set the risk at that point.
So what are your hours for the show now? You're on 2 hours a day. What time does it start Eastern time?
7 a.m. Eastern to 9 a.m. Eastern.
Okay, so gosh, people can come in and get like 3 hours of great programming like they used to do when I was at FX Street in LAR. It's go the Morning Edge, and then come hang out with us. I don't think you're going to get any better content, and I think we have the 2 best rooms on the net, Paulie. What do you think?
Well, I think so. I appreciate that. It's a 2-hour show, like I said, from 7 a.m. to 9 a.m., and then they can roll into your show afterwards. But yeah, it's this dollar CAD has been something else. I do have a key level here at this 37.27 here. If you look, I'll find it right there. There's the 37.27 right coming across here. Can it scoot up to 37? Yeah, but you can see these 2 key levels right here. There. So I don't, like I said, I think that the I caught the break to 22, but I didn't get long down there. I thought there was going to be one more shot down to 31. So that's a great call that you made from 33. And you're thinking we're getting closer, maybe like I think 61.8 is 38.80. Nick showed earlier in the day, up towards that 139 level. Do you have numbers up there? Oh, you have numbers right here. One thing with the dollar CAD, one thing I started Joe talking about the Aussie dollar. This market with the Aussie dollar, once it gets going, and I've told people it trends and trends and trends, whether it's to the upside or the downside, and you just can't get in the way of it because it just keeps on going. Yeah. The dollar CAD, to a lesser extent, is similar to that, and I've been on the wrong side of the dollar CAD before. In the past, where I'm like, oh my God, it just keeps on going higher. You really have to wait till it hits these levels, and you have to see some kind of, I remember I think Nick was saying something about that, but okay, well, we got this thing, but we don't have confirmation yet. And you really have to see that here with the dollar CAD too. Now, on a short-term basis, yeah, we got a gravestone doji, but look, it didn't even give you that much. But today is going to be key. We'll have to see how we close them today. Well, say we go to 45 crude, okay? We take out the 47. That should take it up there, don't you think? Yeah, because crude just dipped down to 47.30, and but I mean, crude's pretty oversold at this point. Not that I'm saying we're going to get some kind of a bottom or anything like that, but we're pretty oversold. Yeah, we saw a lot of funds have exited out. Basically, they've thrown the towel. So no one just turns around and steps in and buys it at that point. But I think we kind of hit a washout area here. The one that has surprised me a lot, I have to admit, has been the cable. I don't know how much time we have left, but you can see here since the beginning of April, we've rallied up almost 700 pips. Now, generally, April is a good seasonal period because of tax receipts. And May generally is the counter to that, okay? So usually seasonally it's weaker, but this thing is held up like a champ. But we'll have to see how things go, but I have to believe that this thing is going to eventually have to go and work lower. It's hanging around here. The
One
key
more
is going to be a
drive
short
towards
push.
130 is my guess.
I have a level right here at 29.91, and
Okay.
we can back it up. And you see right here, you see right there with that you got a couple of touches right here, support and then resistance. That's the only thing I can see. I just don't see now. Once they get past that election, here's the deal. They think that what's her name, May, and the Conservative Party are going to. I saw the Reuters poll. They think it's going to be a landslide. So once you get up here, what's left? You see what I'm saying? What's left to propel us higher? And the people that were on the wrong side, they got smoked down. Well, they're not going to buy. They're already out. They're gone. And if you're long, well, it's not like you're going to add on. And in order for this market to move much higher, you need brand new buying. I just don't see where the impetus.
Yeah, why can't we go to 130, pull back to 127, then trade 135?
You know what? That sounds perfect to me. It does.
So from one host to another, Paulie, this was the interview of the hosts. You know, at least we don't have to bring anyone a cocktail as a host. We just bring them compelling, actionable ideas every day. And I'm proud to call you a contemporary of mine, and wish you continued success in your role as chief host. Now that Moses Morrow is over here of the Morning Edge, and looking forward to Blake coming back next week and parting the Red Sea. And Paulie, really a pleasure talking to you. You are a top gun, my trading warrior, brother.
Oh, well, thank you very much. It's very kind of you, and best of luck for everything, Dale.
Thank you, man.
Well, you have
All
a
right,
good day.
good luck on the Fed and NFP this week, buddy. And let's do this again down the road, okay, bro?
Well, certainly. You have a good day yourself.
All right.
Have a wonderful day for me as well. It's
All right, that's everyone. That's Paulie Franco. Catch him on the Morning Edge show. If you can post your link to your show, people are asking for it, Paulie. I don't have it. And
I have to go. I'll go in and find it.
Okay.
To post it in there. I know one guy used to post it every now and then. So.
And you can find him on Twitter at SPZ_trader. SPZ like Spoos_trader. So that's going to be a wrap. Thank you, Paulie. Thank you, Steve Volge. Thank you, Nicola Duke. Thank you, Stelios.
Thank you for having us, Dave.
Thank you, Face Community. And I have another good guest tomorrow. Dana Lyons is a great technician. He's more on the stock side, but he's also a very elite analyst. And I'll see everyone tomorrow. Good hunting. And remember, don't just count your pips, count your blessings. Money comes and goes. Time is gone forever. Make it count. And thanks for spending an hour and a half with us today. Adios.